Hello, welcome to my YouTube channel Nairnomics, where we discuss about latest developments on economy in general and relevant stocks in particular. If you are a student or an early stock market investor and if you are interested in these topics, please like, share and subscribe to my channel. All information mentioned on my channel are my particular views based on my research and in no way should be considered as investment advisory. So please contact your investment advisor for any investment decisions. The first topic of my channel today will be on the latest development in India announced by our finance minister, and it is called the National Monetization Pipeline. So Madam Nirmala in August 2021 has announced the National Monetization Pipeline, through which the government will be leasing out its infrastructure assets to generate rupees 6 lakh crore over the next 4 years. So let's understand what is this National Monetization Pipeline, how will it impact the government, what is the methodology and why is it required at this particular point of time. Let's look into the details of this program. The NMP aims to unlock the potential of brownfield assets owned by the government by tapping institutional and long-term capital. It is hoped that the money raised by these investments can be deployed in new infrastructure creation. The government of India has been a primary creator of infrastructure in India since independence. The government owns many infrastructure assets, and through this program, the government will give assets such as roads, telecom towers, airports, ports, and stadiums for lease to private operators for a specified period. All these years, the government was operating these assets, and now government feels that if the private companies operate these assets, it would lead to improvement in usage and operational of the assets. In return of operation of these assets, the private parties will pay government a lump sum money, and the government plans to use this money to build new infrastructure. Since last few years, there has been an issue with private capital not coming into creating of new infrastructure assets. And through this program, the government hopes to rope in private players for infrastructure development in India. The most important thing to remember here is that none of these assets are up for sale. They are going to be leased out to private partners through an open and transparent bidding process and on terms which will safeguard the public interest. We are not sure on how this could play out right now, but there could be outright lease to specific companies, or government might create infrastructure investment trust or real estate investment trust so that investors can participate in these assets. These asset classes are like mutual funds which pool investments and then invest in infrastructure. This will allow the people of India and prominent financial investors to invest in the country's national assets. Why is this program required? It is required because the government needs financial resources to upgrade India's infrastructure. One cannot expect government to use its own revenue, that is the taxpayers' money, and continue create assets. This is not possible endlessly. Once the nation is growing, meaning that the underlying infrastructure is being used, the asset is creating money for itself, the asset has now become less risky, then private capital can be used to create liquidity, and this additional liquidity by monetizing of these assets can be used to create newer assets. One of the very well done example of asset monetization is the Mumbai-Pune Expressway. The Mumbai-Pune Expressway was monetized for rupees 8,200 crores. IRB Infrastructure won the contract under TOT model, which is the toll operate and toll model, and paid an upfront 6,500 crores and a further staggered payment for a sub-concession period of 10 years and 2 months. One of the major issues we might find on such kind of an asset monetization program is that there could be a possibility of monopolies in certain sectors. People have been wary of certain business houses cornering major infrastructure projects. But with regulators, Competition Commission of India and courts which are very active, there is a sense that monopolies may not be created. Major monopolies like railways are not being considered under this program. A well-run NMP scheme has the potential to create exponential growth in employment. This is because when assets are operated well, jobs are created to manage the assets. With additional funds available through monetized assets, government spends more money to create new infrastructure. The new infrastructure creates new jobs. The direct, indirect, and induced jobs are created. How to play this theme in the stock market? As you already know, rupees 6 lakh crore worth of assets will be monetized. So the focus will be on the infrastructure stocks. Out of the 6 lakh crore NMP program, 27% will be raised from the road assets. Companies like Ashoka Buildcon, Dilip Buildcon, PNC Infratech would gain from the asset monetization program. The list, however, is not exclusive. Let's conclude today's video with a small rewind of our discussions. The NMP program will generate 6 lakh crore revenue to the government over next 4 years. The road infrastructure companies may tend to benefit more because I feel that a lot of money through this program will be reinvested in building roads. The road ministry in India is one of the active departments. They have a target construction of 100 kilometers of road per day, which is huge. One key highlight to keep in mind is that many infrastructure companies are loaded with debt. So companies with lower debt are at an advantageous position to bid when these assets are being leased out. And if the infrastructure companies don't want to play the operational part of the business and they decide to bid for newer road projects, then the balance sheet should be strong enough to bid for building of new assets as and when tenders are out. The assets under NMP are less risky as they are already operational. So you will find sovereign funds, private equity players who are happy with 9 to 10% returns bidding for these assets. I would like to thank you for watching this video. If you think I should have added more details, then please let me know in the comment section. If you need a copy of my presentation, kindly add me on my Instagram. The link is in the description, and send me a DM and I will be happy to send the presentation to you. Please like, share and subscribe to my channel, and if you have any particular topic in mind, kindly let me know and I will take it up soon on my channel. Thank you and all the best.